The stock market has been selling for over a month now. It's starting to look and smell like a recession. I don't think this is buy the dip. The people out there who are promoting the idea that this is a buy the dip moment, I think you're going to get burned. We could see a much more significant drop in the S&P 500 in the months ahead. I don't think you've seen the real selling yet, and there may be a significant 1 or 2 day drop coming, i.e. a crash. Wouldn't surprise me one bit. This graph is the S&P 500 total return. We're down about 10% from the high back in February. But if this is a recession, we can easily go down another 20 or 30% from here, and it can happen really fast. If you look at the trading pattern in the S&P 500, this is the total return graph, before the 2001 recession and before 2008 recession, you're going to see that the trading activity was very similar to what we're seeing here in early 2025. That's what has me worried, in addition to many other factors that I've detailed in a number of videos outlining why I think the odds of recession are high. Before the big drop in the fall of 2008 for the S&P 500, there were plenty of warning signs. The market had peaked in late 2007 and was deteriorating just like it is now in the first quarter of 2025. Eerily similar. Bear Stearns failed right here, March of 2008, and many people brushed that off. But when Lehman Brothers failed in September, that's when the real crash started. The same trading pattern happened before the 2001 recession. We peaked in the spring of the year 2000, and then we started to deteriorate, just like the first quarter of 2025. We were in a bubble for technology stocks in 2000. Back then it was the dot-com stocks. Today, it's the AI stocks. The real crash didn't occur until a couple years after the selling started. And also of note, technically the recession was over before the crash had finished. Something to think about now. We aren't even in the recession yet, or if we are, it's just in the very beginning stages. So the real drop, if we're going to have a recession and the market's going to go lower, the real drop hasn't even occurred yet. So get ready and buckle up. Now is the time to make sure that your portfolio is properly aligned with your risk tolerance and you fully understand just how much money that you can lose if we have a recession and a corresponding crash in the stock market. The odds are high. We've been in a bull market for stocks for a long time, 16 years. 2008 was 17 years ago, and we've been climbing and climbing ever since the bottom in early 2009. Trees don't grow to the moon, and we are very likely to see this business cycle turn. Now, I think that the tariffs that we're all talking about these days have the potential to reinvigorate industrial activity in the United States. They could have a very positive long-term impact, but that's the long game. In the near term, we're probably going to see a recession. Nobody knows how shallow or deep that recession might be or if we even get one, but the odds look like a recession is coming, so you need to be prepared. If you have questions about your investments, please give my office a call. We would be happy to give you a free second opinion on your portfolio. If you like this content, please share it with your friends. I hope this video was helpful. I hope it gets you thinking, helps you better analyze your investments, and overall improve your family's financial plan.